Hello friends, this is Leo. Welcome to the OrderFlow class where we talk about imbalance and stacked imbalance indicator in the order. Okay. So now what makes the price of a security move? It is basically the buyers and the sellers, right? So it will be very useful if you quickly visualize when the large orders of buyers and sellers enter the market. So it is basically very simple, right? To do this, what we can do, we can look at the buy and sell imbalance on a footprint chart. Imbalances are basically simply a lot of more aggressive buyers than sellers, or a lot more aggressive sellers than buyers at any given price. So imbalance is a special variation of the footprint chart that highlights aggressive buying and aggressive selling. Somebody called as an aggressive behavior, which is fine. Both are same, right? So this highlights the price level where the volume is excess over one another. Could be selling volume is more than the buying volume, or the buying volume is more than the selling volume. Okay, and we can see that in the order flow chart in a minute. And so this kind of tells you that how aggressive they are. Okay, and in the imbalance chart settings, we can normally specify the ratio between buying and selling and at each price level. For example, in our setting, we have set it to 3, ratio 3, which means that it will show you all the imbalances, which is exceeding over 300%. Okay. Either could be either buying imbalance or a selling imbalance. What does it mean? If the buyers are more aggressive, if they are exceeding 300% more than the sellers, it is called buying imbalance. If the sellers are more 300% more than the buyers, then that isn't selling imbalance. Okay, so it kind of shows you a lot of consecutive imbalance, right? If you can see that 3 consecutive levels, then that is called stacked imbalance. Okay, so these zones are very, very important because this will act as a support and resistance levels, because these are the levels where market participants are very active in the market. So when the market retest those levels, the same participants may expect to reappear. That's what we call sometimes as a retrace. Okay. Now let's go and take a look at the order flow chart with some live examples. Now let's take a look at the Nifty chart. Okay. You see it here. You can see this buying happening, and they are actually overthrowing the selling here, right? And it came back. Of course, a selling imbalance happened, but the buyers are very aggressive and they push the market higher, right? So this will actually act as a support in many cases. Similar thing happened at this level, then they came back and they moved higher. So this is one example of the buying imbalance. Now let's go and take a look at the selling imbalance. Okay. So in the selling imbalance, this is on a bank nifty. We can see this selling. We can see this selling. You can see this selling. If you look at these orders at the right side, which is the buy orders, they're actually very, very less compared to the sellers. Okay. So that tells you that sellers are aggressive, right? Here also. Okay. And this market has continued to fall, and it rebounded, but again, it fell later, right? So these are some of the examples of the imbalance and the stacked imbalance. What is the meaning of imbalance and what is the meaning of stacked imbalance, and how we can use this technique to make a trade. That we will discuss when we come to the some of the case studies. Okay, but this is more about indicators. Okay, and I'll see you in the next video. Thank you. Jai Hind. Bye bye.